In today's session, we would be learning the next subsidiary book for recording cash transactions, which is the triple column cash book. So we've already, in previous sessions, we learned single column, we learned double column. Today's session, we would be learning triple column cash book. Triple column cash book is also called as three column cash book. In another name for triple column cash book is three column cash book. So in three column cash book, it is used by organizations or firms which carry out frequent check transactions. When we learned a two column cash book, we saw that whenever you have transactions corresponding to the bank account, you will have to prepare a separate bank ledger account. Whenever we have transactions that relate to the bank, that is, you're carrying out transactions, you're carrying out some payment from bank, or you're issuing a check to one of your suppliers, in those scenarios, it is mandatory for you to prepare a bank ledger account as well, because the cash that you have in a bank is the extension of two column cash book. Now, in a nutshell, two column cash book, preparing transactions or maintaining transactions into two column cash book, it is not so feasible or it's not so easy unlike the other cash books. So triple column cash books is exclusively meant for businesses or firms which carry out a large number of transactions with the help of check. Now, in the case of three column cash book, what happens is we will have three separate columns. The first column corresponds to discount. So in discount, all your discount related amounts and transactions are recorded. One important aspect that you have to remember about the discount column is it is a memorandum column. Now, what is meant by memorandum column? Memorandum column means here you're writing down the transactions only for reference purpose. Discount column need not be balanced unlike the other columns. So discount column, whatever transactions that you end up writing over there, you need not record, you need not balance, unlike how you do for the other accounts. Then you have your cash column. So cash column is used for recording any kind of cash transactions. Whenever you're making payments from your cash box in your firm, those transactions are recorded in your cash column. Then you have your bank column. Any payments, any transactions, any receipt of cash that is happening through your bank account, those transactions would get recorded into the bank column. One important fact that you have to remember here is cash column, bank column, these two columns have to be balanced. Discount column need not be balanced because it is a memorandum column. Now, when we learn triple column cash book, we would also be learning a certain type of transaction which are called as contra entries. Three column cash book, we would be learning certain type of transactions which are called as contra entries. So contra entries are transactions which are very unique to triple column cash book. These are specific to the three column cash book. So what are contra entries? Contra entries are those transactions which feature on both debit as well as credit side of your three column cash book for the same date. These are transactions which feature, which are featuring on both the debit side as well as the credit side of your three column cash book for the same date. So on a specific date, on any given date, you will be having a transaction happening on the debit side as well as on the credit side. So these kind of transactions are called as contra entries because it is happening on both the sides. Now, when it comes to triple column cash book, there is a slight difference with the treatment of check transactions. So I wish all of you would be paying a lot of attention to this specific slide, because here we would be discussing how we would be going about the treatment of check transactions. Whenever you have any kind of check transactions, how do you go about capturing them? Because in three column cash book, the treatment of check transactions is slightly different from the other two cash books that we have learned. So let's discuss these. The first scenario is we would be talking about payments by check. Whenever you have to pay some money to someone and you're issuing a check from your firm. So in such cases, how do you go about treating the transactions? So any payment of check, it would be reflected on the uh, credit side of the bank column. Okay, so please remember, whenever we carry out any payment by check, okay, payment by check would be reflected on the credit side of the triple column cash book and specifically into the bank column. Now, one important thing that you have to remember is cash column is real in nature, bank column is personal in nature. I'll repeat that. The cash column of your three column cash book, that is real in nature. So the golden rule is debit what comes in, credit what goes out. The bank column of the three column cash book, that is personal in nature. So the golden rule for personal account is debit the receiver, credit the giver. When you're making a payment to someone by check, you are giving cash out, you're giving money out. That's the reason why whenever you issue a check, whenever you give a check to someone, those transactions have to be featured on the credit side of your bank column on the same date. Okay? So on whichever date you end up issuing the check, on that day itself, you will have to show the transaction on the credit side of your bank column. Now we have a receipt of check. Now, receipt of check means someone is giving you a check. You carried out a transaction with someone. The payment for that transaction, they are paying or they're carrying out with the help of check. So in such cases, how do you go about treating the transactions? Now here we will be having two scenarios. The first scenario is where we will be receiving the check and we are depositing the check into the bank on the same day. So the first scenario is we are receiving the check and we are depositing the check into the bank on the same day. So what could happen is someone has given you a check, you took the check for that person, you visited the bank, you dropped the check, or you gave the check at the bank counter to be deposited into your bank account. So now this is the first scenario. In this case, what would happen is you would debit the bank column. Okay? In this scenario, on the day that you have received the check, you will debit the bank column. Now remember, bank column is personal in nature. Golden rule is debit the receiver. Okay, so here you're receiving the check. Okay, since you're receiving the check, what will happen is on the day that you have received the check, you will debit the bank column. Okay, you will debit the bank column. Then you have scenario two. Okay, you have a scenario. You have the second scenario. Second scenario is you're receiving the check, but you're depositing the check on a later date. Okay, so instead of visiting the bank on every day, you decide to visit maybe at a regular interval. You might be doing that once in a week, it might be once in 2 weeks, it might be once in a month. So you would collect all the checks together and then you would be visiting the bank and then depositing all the checks together. So this is the second scenario. So second scenario is you're receiving the check on a day, but you're depositing the check into the bank on a different date. It will have the deposit of check will happen on altogether a different date. So in this case, how do you go about treating the transaction? The day that you have received the check, you will debit the cash column. Okay? The day that you're receiving the check, you will debit the cash column. So remember, cash column is real in nature. Debit what comes in. Since you have received the check, check is equivalent to cash, but on the day that you've received the check, you're treating it as a cash transaction and then you're debiting the cash column. Now, the day that you go to the bank and you carry out the deposit of the check, you will be passing a contra entry for cash and bank column. The day that you decide to pick up the check, visit the bank, deposit all the checks that you have got together, on that day, you would be passing out a contra entry between cash and bank column. So in triple column cash book, please remember there is a difference with respect to treatment of check transactions. Any payment, it would be any payment by checks, you would be reflecting on the credit side of the bank column. Any receipt of check, we have two scenarios. Scenario one, you receive the check, deposit on the same day, debit, bank column. Scenario two, receive the check, deposit on another day. The day that you receive the check, cash column is debited. The day that you deposit the check, it is a contra entry. So this is how we would be going about with the processing of transactions in 3-column cash book, especially with respect to check transactions. Now let us look at the format of 3-column cash book. Now let's discuss the format of 3-column cash book. 3-column cash book is very much similar to that of 2-column as well as single column. The only difference here is that you have one additional column which is for bank. So on both debit as well as credit side, you have one additional column, and that column corresponds to bank. So remember, here you will have all the 3 accounts. You have discount, discount is nominal in nature. You have cash, cash is real in nature. Bank, bank is personal in nature. So this is the format of 3-column cash book. Okay, this is the format of 3-column cash book.